On Tuesday, the oil market saw a strong rally. Today, the uptrend continues with a rise of 4.6% during trading sessions. Brent crude oil has exceeded the level of $110 per barrel for the first time since August 2014. Such impressive growth can be attributed to the war in Ukraine and harsh sanctions imposed by Europe and the US against Russia. So far, the Western sanctions have not targeted the energy sector directly, but numerous restrictions have already affected the entire country. Moreover, the situation has been aggravated by the actions of certain foreign companies. The largest Western partners, such as ExxonMobil, Shell, British Petroleum and others, are fleeing from the Russian oil giants. All of them announced their intention to terminate cooperation with Russia. Under such conditions, oil prices will hardly be able to stabilize. Given that Russia is becoming a global economic and financial pariah and speculators continue warming up the market, it can be assumed that Brent crude oil has every chance of hitting the level of $130 per barrel in the near future. From a technical point of view, Brent crude oil futures resumed their upward cycle following short-lived stagnation. As a result, oil prices jumped by 12%. Such a price spike signals that excited speculative interest continues to gain momentum amid global market panic. In this regard, it makes no sense to take into account the overbought status of the asset. The most likely scenario for the near term suggests a continued rally in oil prices with slight temporary pullbacks. As for the foreign exchange market, the ruble continues to suffer losses. The steps taken by the Bank of Russia managed to stop panic, but just for a while. Moreover, growth in the commodity market is no longer a positive sign for the Russian currency. Factors that used to support the Russian currency took a backseat due to the news on the war in Ukraine and Western sanctions. Besides, the ruble was weighed down by Russia's defense ministry that announced its intention to continue hostility. Thus, on Tuesday, the Russian currency sank by almost 7 rubles and closed at the level above 101 rubles per dollar. Under such circumstances, the Russian currency has no chance of strengthening. As long as the aggressive military rhetoric persists, traders can only count on the pair's stabilization below $100 per dollar, 100 rubles per dollar, and slight corrections. When the market ignores indicators, levels and patterns, technical analysis is rather useless. The dollar-ruble pair resumed its bullish run after a short-lived correction. The quotes are currently trading above the mark of 100 rubles per dollar. The pair is extremely overbought, but it should not be taken into account, so it's worth relying solely on the basis of fundamental news. Gold also rallied on Tuesday. Notably, the yellow metal was standing still for several days in a row. This sideways movement was due to Western sanctions that affected not only foreign exchange assets, banks and companies, but also gold reserves. Today, market confusion appears to have faded away and the metal has started to gain value again. Investors still regard gold as a safe haven asset. True, its current movement cannot yet be called significant. Obviously, much stems from market uncertainty. The higher the level of uncertainty, the stronger the upside momentum. Technical analysis shows that the growth potential of the precious metal is extremely high. On Tuesday, gold futures rushed up, gaining 1.89%. Thus, the trading instrument has every chance of extending gains. Despite possible pullbacks, the quote may well reach and overcome the psychological mark of $2,000 per troy ounce in the future. That's all for now. Keep in touch with the latest events, follow our news on InstaForex news channel, and may your trading be lucrative. See you back soon.